So it's tax return season, and for those of you who don't know, I've actually been doing my own taxes on TurboTax, despite owning 90 units of real estate at one point. Now about 51 units of real estate, and I have like 7 or 8 single member LLCs. But despite all that, I actually do all my own taxes on TurboTax. I pay about, I think, $130 a year for the service. I usually wait for the sale on Amazon. Like, they usually email you like around this time, and it's about $130. And I buy I think it's the TurboTax Home and Business, because I just have a bunch of single member LLCs. But I actually do my own taxes. It's not as complicated as you think. I mean, you do learn every time as you go through. And what's nice is, like, my uncle, he's a CPA, so I will like bounce ideas off of him, and he owns real estate as well, so he does his own taxes too. So I kind of ask him like how to do it, right? Because a lot of CPAs don't own real estate, so they don't know that I mean, they know conceptually the tax advantages of real estate, but at the end of the day, I feel like the CPA is kind of doing what I'm doing anyways. Like, I have to gather all the financial information, and then they walk you through it. Like, TurboTax is pretty user friendly. They'll walk you through step by step on how to do it, right? So let me kind of share, and I'm going to start documenting as I start doing my property taxes, maybe like this weekend, or file my taxes, or start working on it, because it takes me about 2 weeks of like actual like work. It takes a lot of time gathering all your information, but I'll kind of walk you through the process and share the journey of what I do. So the first thing I do is, when I get my W-2, my W-2, my 1099 from my W-2 job, that's when it kind of signifies me to like start doing my taxes. But what's nice about TurboTax is, since I've done my taxes through TurboTax, it actually imports a lot of information from the prior year. So import all my properties, import my jobs, import my businesses, my LLC. So it makes it easier for me. But the first time you're doing it, it might be a little bit challenging, right? But then it gets easier and easier over time. And then TurboTax has a great like forum where like you just can like look at answers to common questions. There's a number that you can call, and then if you need questions or very simple stuff. And then I would say, for me, I'm on the more complicated end of taxes because I own a bunch of real estate. But let me kind of break it down. So when you first sign up for TurboTax, they're going to ask for your personal information, right? Like your name, your social, your address. And at this point, it's going to say, okay, do you work a W-2? And then it's going to pull your W-2 information, right? So if you work the same job, it's going to pull it from last year. Or if you're doing TurboTax for the first time, you get to input all the information that's going to be on your W-2 form. It's pretty self-explanatory. It says, oh, box number 1, copy it from this form. Box number 2, 3, 4, it's like 30 boxes, right? So you put your W-2 information there. And then as you go by, it'll say, oh, this is how much you are owed, or how much you have to pay Uncle Sam at the end, right? So you go through your W-2, then it's going to ask you, okay, do you have like a side business, right? And so for me, I have like the coaching to mentorship program. So that's through Teachable. So I'll put in my 1099 from Teachable, right? Once again, like for Teachable, I don't pay taxes up front. I pay taxes later, right? Like, because like, with my W-2 job, I pay taxes as I go along with every paycheck, right? But for Teachable, I get all the money up front, and then I pay the taxes later when I file my taxes. So I put in my Teachable, then after that, it's going to say, okay, let's put in all your real estate. So literally each property has its own address, right? So each of my 5 single family homes have their own address, and then my 2 apartment complexes have their own address, and then I have my mobile home park, right? So each property has their own address, and then you go through each property one by one, right? So let's just say I pick my single family home in San Francisco, right? It's going to ask me, all right, well, how much it's going to ask you, okay, what's the tax assessed price? How much is the land worth? What's the structure worth? What's the land worth? So let's say it's $1 million and the land's worth $200,000. Then the property's worth $800,000, and the $800,000 is what you can depreciate over 27.5 years, right? So you take $800,000 divided by 27.5, and that's how much depreciation you can write off every year, right, on that property. So it's gonna, and you can find that on your property tax bill, right? So it's pretty easy. You just look at your property tax bill online. Usually you just type in like whatever, San Francisco County Tax Assessor's Office, type in the address. You can look at it. It tells you what the structure's worth, what the land's worth, right? And whatever the structure is worth, you divide that by 27.5, and that's how much you depreciate every year, right? So it's pretty easy in terms of that end. And at that point, it's gonna say, okay, how much rent did you collect for the year, right? So it's easy. Like, let's say you're getting $1,000 a month times 12, you get $12,000 a year, right? And at this point, it's going to ask for your expenses and break it down, right? Like, what's your property tax? If you have a loan, how much interest did you pay on the loan? If you got a loan, what were the loan origination fees? That's a write-off. Did you have any expenses? Like, did you pay any utilities? What's the insurance? Did you have HOA? Did you pay your property manager? Did you need renovations? You want to gather all your expenses, right? This is why, for me, I have a business banking account and a business credit card. So all my business expenses related to real estate and go into my business bank account and then my business credit card, right? So it's easy. I just pull up my bank statements from my Chase account, all my credit card statements from my Chase account, and I'll allocate it towards each property, right? So I'll go through the income, the expense, depreciation, and then as part of the expense, you can write off, okay, if I drove to the property, right? Let's say I drove 50 miles to my property total, and then you can write off, let's just say, I think it's 64 cents per mile. So you can, let's say I drove to my property once a month, it's 50 miles a month, times 12, so that's 600 miles a year, and you times that by 64 cents, and that's how much you can write off of your driving for your car, right? So that's another tax write-off. So any income, do your expense, it walks you through it one by one, right? Like lawn care, maintenance, repairs, interest rate. Like, it's pretty user-friendly, right? It's not complicated. It'll prompt you in each item. And then you do that for each property, right? So I did my San Francisco property, my Milpitas property, my Livermore. For my apartment complex, it's even easier because my property manager gives me an annual profit and loss statement. So I just take up the total numbers, right? All my gross rent, all my gross expense, and it breaks it down for me. My interest rate, like literally my apartments are the easier ones because like I literally just take the P&L from all of 2023 and I just put in the final number. So actually my apartments are the easiest. I just need to wait for my property managers to give me my 2023 P&L for my 20 unit, my 26 unit, my mobile home park. So those are actually the easiest ones. The ones that take me longer are my single family homes because I don't have property managers on those, and then I pay through my account. So I just got to figure out those expenses, right? And some properties, because I pay the utilities as well, so it's a little bit more complicated. You have to find that information, but you have to gather all your financial information. Makes it easier if you have a business bank account and business credit card, right? So, and this is what CPAs are doing too. They're going to ask you to gather all these documents anyways. So once you do all your properties, at that point, you go to the next step and you're going to delineate, okay, which properties in which LLC. And this part was a little bit more complicated for me on TurboTax. It wasn't as user-friendly, but now that I've done it, it's easier moving forward. But I want to assign, okay, these 3 properties are in this LLC. This apartment's in this own LLC, right? So you want to delineate what the LLCs are, because for each LLC that you own in California, you're going to pay $70 to the franchise tax board. So I don't want to go too crazy with LLCs, but you want some asset protection as well. So for 2023, I cut down a lot of my LLCs, right? Like I had my 2 apartments in Oklahoma in separate LLCs, but after I stabilized one and renovated it, I consolidated both of these stabilized assets, my 20 unit, my 26 in the same LLC, right? My mobile home park, I sold it. The LLC had a note that I'm carrying, but I transferred the note to my holding company so that I can close the LLC to save $700 a year, right? So you want to balance. Like you don't want to go too crazy with LLCs, but you want some LLCs for asset protection. And at that point, for each property, it does a nice breakdown. Like this is your total income. This is your total expense. This is your depreciation. This is how much you're positive or negative net on the property, right? So you can see all your properties. Okay, property 1, I'm positive 10,000. Property 2, I'm negative 8,000. Property 3, I'm positive 5,000. And at the end, it's going to do a sum. It's going to say, okay, you're positive this much or you're negative this much. Usually I'm negative, right? Because I'm doing a depreciation, I'm doing renovations, right? And so at the end, it's going to say negative, and they ask you every time, are you a real estate professional? Are you a real estate professional? For me, I'm not, because I work a full-time W-2. I was going to ask you, are you a passive investor or active investor? And I always say active investor. But the problem is, for active investors, if you make over 150K, you can't not write off any of your real estate losses against your W-2 income, right? So if I'm negative, let's say 50,000, and I make over 150, I cannot write off anything. It just carries forward. It's called passive losses carrying forward, right? So if I make money next year, it carries forward. So all the real estate will kind of counterbalance itself as passive income, but doesn't touch my W-2 income. If I was a real estate professional and I was negative $200,000 on my real estate, let's say I was married and my wife was a real estate professional, and I made $200,000 of W-2, it's going to wipe it out. Negative $200,000 from real estate will offset my $200,000 W-2 income, and I'll pay 0 in taxes and get a nice refund, right? That's why people pay no taxes. And some kind of pro tips is like when you do massive renovations, I think over $5,000, you have to depreciate that over 5 years. So let's just say I fixed up my 26 unit and I put in $200,000 to fix up everything. What I do is I have to write off that $200,000 over 5 years if I want to do it slowly, or depending on the situation, you can do bonus depreciation. So you can write off all $200,000 in year one if bonus depreciation is applicable. But if not, your worst case is you're doing it over like 5 years. So let's just say I put $200,000 in the kitchens. You're going to select depreciation. You're going to select the type. It's going to be kitchen, and then it's going to say, okay, you can do it over like 5 years. So if it's $200,000 over 5 years, you're doing $40,000 a year, right? That carries forward. So you want to break it down for you. So, overall, it's not as complicated as you think. The first time you do it, it's going to be a little bit challenging. As I go through TurboTax, I'm going to actually document my journey and like try to educate you guys about what I know. Because I feel like I know. I'm not a CPA, right? I'm just a guy on YouTube. But I've done my taxes since 2017. I own a lot of real estate, and I learn as I go, right? So I feel like I know just as much as a CPA. But, obviously, there's a lot better CPAs than me. But I just want to share, like, what I've learned from TurboTax, right? And then you can do it for yourself. Like, I'm own 51 units of real estate. I'm doing my own taxes, right? Like, if you just own one or two, you can definitely do your own. So I'm going to start documenting my journey about how I went through TurboTax and what I'm learning along the way, and kind of showing you step by step on how I go through each of my properties. So hopefully you found value from this video, and excited to do my taxes and bring you along the journey. Hope you see you in the next one. Thank you.